Hello, name is Roger Gitonga. I'll be taking you through the role of accounting. Now, this is the very first chapter under Part C, which is known as the accounting, reporting systems, controls, and compliance. As much as we've been focusing in F1 in the previous 7 chapters, we've been focusing more on the accountant in the business perspective. We still have to remember that the accountant still needs to play the primary role, which is accounting. Now, the users of financial statements and accounting information is the first thing we're going to be looking at. We're going to be looking at people who need or use these financial statements and why do they need it. Now, managers of the company use the financial statements because they need the information to make decisions. Shareholders of the company use the financial statements because they are hoping that the investment will bring good returns. So they can be able to judge and see, has this company been making profit? Is this company going to give me a good return from my investment? Stuff like that. Providers of finance. Now, providers of finance are like banks. Okay, so when they give you finance, they want to know whether the company will pay back that loan. Now, they will be able to judge this based on the number of assets that the company has, based on the cash inflows and outflows of the company, based on the profits of the company. Now, employees of the company would want to know if they have some job security. If you see that the company is not doing too well, you might be a bit fearful for your job, and you might end up losing your job because the company might close down. We remember calling this redundancy. Now, trade contacts like suppliers and customers. Now, suppliers will want to know about the company's ability to pay debts. Remember, as a supplier, he's providing goods to you, and he might tell you, okay, you don't have to pay now. I will give you these goods on credit, which means that you'll pay back later on. So sometimes they'll only have that confidence that you'll pay them back later on when they look at your financial statements and see that you're financially stable. While with customers, they need to know that the company is a secure supply source of supply. Now, what this means is that I'll give you an example. I was a true lover of Nokia phones. When they closed down, it really hurt me. I was like, oh my, I won't be able to buy a new Nokia phone again. I'll have to shift to something new. And it was very hard for me to actually move to a different type of phone. But thank goodness Nokia has been able to bounce back, and I hope they'll be able to ideally grow their market again. Now, qualities of good information, relevance. Okay, relevance. If you give me information that is not relevant to me, that will not satisfy my needs, then I will not be bothered to actually look at it. Comprehensibility. Do not give me information that is too much or too little. Give me information that is just enough. Okay. 3, reliability. I need to be able to trust that this information can be relied on to make a decision. So shareholders mostly use the use of auditors to make sure that the information that is given to them is trustworthy and can be relied on. Okay. 4, completeness. Information should be complete. I'm seeing right now in the generation that we're living in, because of the SMS and WhatsApp and the likes, you'd find that people are using different ways of communicating. Like if I want to say okay, I'll put the letter K. Now, the times when you're not communicating and you put the letter K, I may not really understand what you're trying to say, isn't it? Especially if I'm from a different generation. Timeliness, provide information on time. If I want information by next week, then you give me by next month. You'd have already delayed my decision making that might have relied on the information that you would have provided to me. Objectivity. Information should be free from bias. I remember when I was doing my coursework some time back, I was on a website, and this website, if you looked at the name, you already realized that this website was there for its own malicious intentions. They wanted to attack the reputation of a certain company, and hence I could not use that site for my research work because it would have shown that I was also using a site that was totally biased against a certain company. Comparability. Information should be able to be used to compare consistently data of the past with current, especially for performance analysis purposes. So there are times when you'd want to know the performance of a company last month and the performance of the company this month, just to see how well you did. What did you do right this month? What didn't you do last month, and how can you learn from that? Stuff like that. Now, the difference between financial accounting and management accounting is a key factor and a key issue, and something that is really tested in the exam. Now, financial accounting is mainly a method of reporting the results and financial position of a business. They are important sources to outsiders and are prepared mostly for external use. So you'll find that financial accounting entails statements like the financial statements, okay? So the statement of the financial position, the statement of profit or loss, the statement of cash flows will all be found under the financial accounting. While with management or cost accounting, it helps or provides information for managers to make the right decisions. So you'll find with management accounting, it does not necessarily have to follow a certain way or format of preparation, as opposed to financial accounting, which needs to follow a certain format of preparation according to the international accounting standards. Now, with management accounting, it presents accounting information in the form most helpful to management, and you'll find under this budgets and costs analysis and the likes. Now, auditing. Limited liability companies have to be audited by an independent external auditor. If you remember, limited liability companies are those ones that have separate legal personality between the company and the owners or shareholders of the company. So the owners and the companies are two different people, or are treated as two different people. And what happens is that the owners would want to know whether the company is going in the right way or not. And hence they will appoint external auditors to audit that company so that they are sure that the company is going in the right way. Okay, so the external auditors will investigate the financial statements and report as to whether or not they show a true and fair view. So the auditors form an opinion and say that those financial statements are either qualifying or not. That those financial statements have been prepared in the right way or have not been prepared in the right way. So if they do indeed confirm that the accounts, in their opinion, do show a true and fair view and are properly prepared in accordance with company legislation, then we will call this an unqualified or clean audit. I usually make fun that auditors are quite feared by accountants, and they are like the police of the accounting world. So when they come to your company, remember they might be there to discover faults, and no one likes when someone points out their faults, isn't it? So you realize if they don't find anything wrong, then you're like, hi, you're unqualified, that kind of a thing. But it's just a joke that I usually pull out. Now, if the opposite occurs, if they do find something, then they will qualify that audit, and the disputable matters will then have to be discussed and settled. Now we have here internal and external financial information. We did discuss this before under financial accounting and management accounting, but I'll be able to relate the two again for emphasis sake. Now, internal financial information are prepared to help run the day-to-day activities of a company. Examples would include cost schedules, budgets, and variances. Okay, and internal financial information are related to management or cost accounting. But with external financial information, these are reports prepared for external stakeholders. So you'll find that external financial information is relating to financial accounting. So examples would include profit or loss, which deals with income and expenses. We have statement of financial position, which deals with the assets and the liabilities and the equity or capital of a company. And we have the statement of cash flows, which looks at the cash inflow and cash outflow of a company. Database. Now, a database may be described as a pool of data which can be used by any number of applications or thought of as a vast library of fields and records waiting to be used. That's a database where you can find a huge pool of data which will be used or which you can use to help you either in analysis or whatever you'd have or want to do with it. Well, with spreadsheets, if you have used Microsoft Excel, you will see rows and columns, isn't it? So that's a spreadsheet. So a spreadsheet basically is an electronic piece of paper divided into rows and columns with a built-in pencil, an eraser, and calculator. Now, it provides an easy way of performing numerical calculations. It helps you to ideally come up with analysis. It helps you to compare information and the like. It tends to have a lot of benefits. Anyway, thank you so much for listening to me. I hope you had fun. I hope you've been able to capture the key contents of this chapter. Thank you very much.